Well, that was a significant miss by Tata Motors this time, where the company reported a loss of 44,050 crores. We were already expecting a loss by the company, but this number is more than double to what our expectation was. While the revenue growth was almost in line with the numbers at 66,406 crores, and the EBITDA also was almost in line by the company with 5,357 crores as EBITDA, while the margins this time were at 8.3%. A little below from our expectation of 9%. Now coming to their JLR update, then the JLR revenue growth was at 74%, but as expected, the company did report a negative EBIT margin of 0.9%, which they have already highlighted before, versus 7.5% which was recorded last quarter. Along with this, there was a free cash outflow of £996 million by the company. The company did inform that their wholesales revenue was up 73%, but the overall units that has been sold by the company were 27% lower than what was actually planned by the company, and that's only because of the semiconductor shortage issue. The retail sales was quite good by the company, but on the other hand, the positive comment is that the demand remains to be strong, with a record order book of 110,000 units by the company. The company has anticipated that the semiconductor issues and along with this the commodity inflation will have an impact on the company in a shorter term period, but going forward in the second half, they are expecting a good recovery out there. But now coming to their standalone business. Here the revenue growth was 343% on a YoY basis, with the passenger vehicle business achieves more than 10% of the market share after a gap of 9 years. So this is big by the company, and even the CV revenue was up 355% on a YoY basis. There was a free cash outflow by the company, and along with this there has been an impact in their working capital, but that's expected to improve in the second quarter as along with the volumes recover. But now going ahead, talking about their JLR volume outlook, then the company expects the performance to improve progressively in the second half as the supply chain and the pandemic situation improves. They are expecting to report a negative EBIT margin in the second quarter as well, but they are quite hopeful to report a positive EBIT margin and a positive free cash flow in the second half of the current financial year. Presently, as highlighted, they have a record order book of 110,000 global orders, retail orders they have, and it is the highest in the history by the company, representing 3 months of sales cover. But going forward, they share their outlook as well. They are hopeful of a good demand recovery. As of now, they are witnessing strong demand for their JLR, also in their India passenger vehicle, while their CV demand is showing gradual improvement. And the company stays strong on their target of deleveraging the business to near zero automotive debt by FY24. So that's intact by the company. But lots more to know on the stock. What are the brokerages thinking and how is the management commentary? We'll keep you updated on that.